Hey guys, welcome back to the channel. Just want to go over the New York Open, the first 30 minutes of May 30th, the 9:30 to 10 a.m. Moves. I see 3 trade setups here following structure, so I just want to point them out to you. This dark gray area here is the 9:30 to 10 a.m. Eastern Time on the 1-minute chart. And the first thing we see is a short-term high being taken out by 1 tick. Here it's basically taking out this range right here. This candle right here actually is above this, so it didn't take out that liquidity, but it did take out any stops resting here just by 1 tick. I don't like it when it goes up by only one tick. It's not my favorite. So the next thing we see is, looking left, is the volume imbalance here. So we have that. We're going to mark that on our chart because we're starting at this gray line here, this dark gray line starting. So we're looking back. See this, we see this, we see this market structure shift here, this breaking down here, and that's where we're starting. So we're starting here. What does price do? It shoots back up, stops, comes up a little bit, shoots back down, starts back up, shoots back up. And you're like, what is going on? So they're clearing this range here. Just buying time. They come back up to this volume imbalance and see where the bodies stop at the bottom of that volume imbalance. The wicks do the damage, but they go up 1 tick above and then it shoots down. Okay? So you could have taken your first trade setup, could have been here at the volume imbalance because you got a short-term high taken out. You have a market structure shift. Where's the pullback? Well, this candle doesn't give it to you. This candle wicks up and then shoots down, so you could have possibly got in there with the fair value gaps right here. But you see this volume imbalance, knowing that it could trade up there, and it's only a few handles, gosh, even 1 handle above. So you'd definitely want to put your high up here and take a higher trade. So the volume imbalance is the better play. I wouldn't have taken it. I do not like this. It's just not my favorite. But if you did take this trade, your stop would have been above this. You'd have put it up at 1.5 to 2 handles. And then come down to 5, and you get, 3. This is actually 2 to 3, so you would have got 6 handles, risking 2. It's still, it does work out really well in your favor. Anyway, if you didn't take that trade, can't say I don't blame you. What you'd see next is this short-term low being taken out, and then price coming back up. Looking left, you'd see a fair value gap here. And this comes all the way up into this and stops to the tick, to the top of that fair value gap. So you could have placed your trade set up right here. At this right here, you would have got in. Your stop would have been above this swing high here, 1 tick above. That's the first candle of the fair value gap. Risking 5, it'd be 5 handles, and so you'd go 1 to 2. So you'd go to 2 would be here, so 5. Be 10 over here. Where would be your draw liquidity? There's actually one right there. Let me show you where that comes from. It comes from the midnight, just under the midnight open. That's where that is right there. So there's your draw on liquidity, just so you see where it's actually coming from. Can you get 10 handles? Absolutely. You actually get a little more. So if you miss this, where's another opportunity here to get in? Well, there's a breaker block right here. I just want to show you the breaker block because a lot of people miss it in this congested up, down, up, down, up, down candles and miss the breaker block. But I want to show it to you. So let me go back and just throw on a line chart here. Swing high, swing low. It comes back up. It takes out this swing high. So it comes up. And then when it trades down through it, it's a breaker block when it comes back up to it, and then you take your trade down, take it down. So that's the breaker block right there. So price up, down, came up, trades down through it at this candle right here. When it closes down below it, it's now waiting for it to come up, and it comes up. It touches it once, twice, 3, 4, 5, 6 times, and then it starts rallying down. Your trade would have been here at the bottom of the breaker block. 1 tick above the breaker block because we don't expect it to go. It's also 1 tick above the fair value gap here. So you've got in multiple things that are separating price. You also have a small volume imbalance right here. I know it's hard to see because this thing keeps popping up, but there is a volume imbalance right there. You could have taken your trade. You have 4.5, and you get 10. You know 9 is right here. 2 is right there. That's 1 to 2 right there. There's your 3 trade setups for the New York Open on May 30th.